Hello everyone, my name is Doug from Trade with Doug. Today I'm going to give you two stocks that I think are going to double. And do you want to hear them? Of course you do, because we are a society of doubling. You go into Mickey D's, you supersize. You go into a convenience store, you get the big gulp. You go to Starbucks, give me the Vente Bro. You buy a truck, you lift the thing. So we love doubling, and these two stocks I think will double, so stay tuned. Okay, the first stock I want to talk about for today that I think will double from here, and it's certainly not the first time I've talked about this stock, and you longtime viewers of the channel know it is NIO. And I've been talking about NIO honestly since it was $13. I've had a position since it was in the $13. And I recently did a video here on YouTube just a few months back when it was trading at $30, why I felt it would reach the next emotional milestone of 50, and we did see that. Now that we've surpassed 50 and the stock has gone through an offering, which I'll talk about here in just a minute, I think the chart is now setting up for a great entry point where we could see that next leg take NIO into $100 by the summer. And here's a couple of reasons why I think that. First of all, it's going to be the sector. We all know that the EV sector is hot, and it probably will continue to be hot over the next several months, which will only help NIO. More importantly, though, I think what a lot of investors and traders, especially newer ones, or those that are trading on smaller accounts, we look back at Tesla, and there's a lot of people who missed Tesla. I mean, I can remember just a few years ago when it was trading in the 30s and $40 range. Actually, it was a little bit longer than that. But I remember a time when it was like that. And you see this explosion over several years where Tesla's on this meteoric rise going up to 1,000 and splitting down to 400, going back almost to 1,000 where it sits now at 860s or $70. And everybody in their mind, traders, investors, the FOMOers from the old school who missed it or didn't understand it at the time, really want to get back in that next Tesla. And we always look for that as traders and investors. What is the next Apple? What is the next Tesla? What is the next Netflix? What can we get in at a lower price now and watch it double, triple, or even quadruple over several years? And I think when you look at NIO, it check marks that box. As many investors and traders call it, it's the Tesla of China. Now, whether that turns out to be true or not remains to be seen, but I think just on that emotional level, when you combine it with the sector that it's in, NIO stands a very good chance of going higher. Now, if we look at it from a technical aspect, it's already up more than 100. It's already more than doubled, maybe even tripled since I mentioned it at 13. We've gone through this very strong parabolic rise. And I would always, recommend as well for everyone that is watching to never chase these stocks. I know sometimes FOMO really takes over our inner emotion and we don't want to be left out, especially when something is doubling, tripling, or even quadrupling in price. But patience will always pay out for you in the long run. And we've got this nice little pullback, and you have this secondary run that just kind of tired itself out around the 67 level. Now, what has happened recently news-wise is NIO has priced in a secondary, which caused this thing to sell down here into the 58s. I think this is a pretty good retracement. I think what you will see here on a technical standpoint is it will probably in most cases hold the lower 50s as support. So the closer you can get to the lower 50s as a first time entry, I think is a good spot for this. And it's part of the natural sequence of how these charts work. So I would expect that you see this to pull in very similar to what you saw here, a nice pull down into support, building a level, and then creating a next leg up. Now, my only concern when it comes to NIO is the fact that it's Chinese. And if a lot of you want to know what that means, I highly suggest you watch the Netflix documentary. It's on Netflix right now, and everyone who trades and invests must watch this anyway. It's called The China Hustle. And really, this is about how Chinese companies can operate on the United States Stock Exchange. And the problem is when it comes to China, there's always some things that we need to be aware of. And that is the fact that some of the stuff that they talk about might not be true. Some of the government games that China has a tendency to play, that we have recently seen with something like BABA, could create an outside wild card element that maybe an American-based company like Tesla doesn't have to deal with. So there's a lot of rules, regulations, and restrictions that perhaps NIO doesn't have to follow by. They can actually, in China, make up their financial statements, and there really isn't anything that they can do about it. And that's true. Just watch the documentary. Now, I'm not saying that NIO is doing that right now. We saw the NIO Day. It was a really positive event for the company. But just the fact that it is Chinese, we have to have one eye open on this. I still, however, think because it's in the EV sector and that many traders and investors are comparing this with the next Tesla, that they can get in because many, you got to admit, many investors and traders are priced out of Tesla. Those with smaller accounts cannot afford to buy Tesla shares anymore. So maybe this is the next alternative. And the market in China, we all know, is huge for these type of EV cars. It remains to be seen, but both that on a fundamental level and the technical setup leads me to believe that NIO will probably be $100 or more by the summer. Now, another one I'm going to talk about is also one, and I've spoke about several times, and it's probably my favorite stock. And again, is Peloton. I've been in Peloton since it was in the 20s, and I still hold a position here. The thing about Peloton is one of the things that I've learned over the years is not everything in the market has to make sense to the investor and the trader. Now, we're going to bring up Tesla again, but I also want to bring up Roku as well. There's always a stock that I've learned over time that sort of bucks the trend and doesn't make sense. And the fact that it doesn't make sense leads to people shorting it and shorting it in droves. In fact, this is actually what fueled Tesla's rally. Was number one, was everyone saying it's a car maker, comparing it to other car makers, showing their market cap. And yes, it's overbought now, of course, but still, it was also Elon Musk's ability to fuel that fire and create more shorts and squeeze those shorts that caused Tesla to move in the first place. And I think you saw that as well as in Peloton. Because one thing that we talk about when it comes to trading and investing is branding. There are brands and then there are gimmicks. For example, Netflix is a brand. And one way to really distinguish a brand, Apple is also a brand, but how you distinguish a brand is if a company can raise their prices or, let's say, make an inferior product compared to its competitors but still have a cult following, that is a brand. And with branding, you have power, you have longevity. How does this apply to Peloton, you might ask, is this. We all know there are knockoff bicycles. You don't need to spend $7,000 or $8,000 on a pretentiously stationary bicycle with a fancy iPad dash. You can get the same workout, you can get the same exercise and achieve the same results with a $200 to $300 knockoff bicycle. But that's not the point. The point is people are still migrating to Peloton because of the branding. Now, a lot of this has to do with the subscriptions that they sell throughout. You're going to use the iPad, you're going to use the services, you have to actually buy a subscription with Peloton. And even through this economic struggle of a time that we're having in the world right now with coronavirus lockdowns, that's causing more people to work out at home, causing them to purchase more of these bicycles. And in fact, if you buy one now, I think you got to wait 3 to 4 months. So just kind of combining those things together. Number one is the non-understanding of it, that it's just an overpriced bicycle, which could lead shorts to short even more of this stock. By doing that and not understanding how the profit works for them leads to squeezes that will cause these stocks to go even higher. So that's why I think, fundamentally, their Peloton will have good earnings. They have a demand for their product. They have a following, let's call it a cult following to some degree of that product. And I think it has staying power to move to that next level. And when I've seen stocks like Roku that were bashed early on, I've seen things like Tesla that was bashed early on, Nvidia. These stocks used to trade at $20 to $30 to $40, and they eventually made these meteoric rises. And again, it kind of goes back to what I was saying with NIO. This puts us in the position of what is the next Tesla? What is the next multi-runner? What is the next $30 to $50 to $80 stock that may end up at 500 or 600 like last year with the DOCUs or the ZMs? What is it going to be? Now, in the short term, you may even see an additional spike in this Peloton based on how maybe Joe Biden handles maybe lockdowns. Maybe this is something that he wants to do. That remains to be seen, but any additional lockdowns or extended coronavirus lockdowns will only aid the bottom line for Peloton. Now, if we take a quick snapshot as well as the chart, they've just recently been downgraded, and I think this downgrade allows yet again, like the pricing offering of NIO, allows us a better entry point rather than us having to chase this stock at all-time highs. Now, much like NIO, this thing has already doubled, already tripled in price. But I do believe that both of these are very similar in the fact that although they have gone up already, there's still excessive room and there's still enough room for you guys out there to make good money on it. I would imagine that Peloton will hold this area in the lower 140s. So if you're able to pick that up in a 140s, I would say if you're watching this today, the downgrade was just yesterday, give it a day or two to settle down and build another base. And I think you will see the very same type of run up that you saw back here. And remember, any stock that you're trading will do this, guys. Never chase stocks, no matter which ones you're looking at your own, because even these parabolic stocks like this pull back, they build new bases, and then they make these secondary ramps, these third ramps. So the reason that I'm giving you NIO and Peloton today is because they both have that type of technical setup in them to where they're pulling back now on news and they're pulling back on downgrades and shelf offerings or offerings. They're being pulled back on this, and I think that's allowing you a better entry point. And if we wait a couple of days, that second, third, or fourth leg, the next leg that takes those NIO to 100, this one into the 200s, is probably just right around the corner. So anyway, those are my two stocks that I think will double. What are the stocks you guys think are going to double? Put them down there in the description or in the comment section. Just kind of let me know what you guys are trading, stocks that you maybe want me to analyze in some of these upcoming sessions. Until the next time, take care, guys. Trade well.